Hey, what's up, everybody? So much going on lately. I say that all the time, but at the same time, it is a truth currently. There's a lot going on in the market. There's a lot of different sectors that are moving. There's energy pulled back. The S&P looked like it's bottoming out, kind of. Let's see how that goes. I'll tell you my reasons for thinking about the bottom, and also where we're at currently, and if we still think it's going higher for both of our angles. And then we'll hop into a little bit about metals, emerging markets, and so on. So lots to get through. And I also saw a comment about Bitcoin. We will be talking about that as well at the end of the show. So, you know, how's everybody doing today? Please drop some notes in the chat. Good morning to everybody. Glad to see everybody here today as well. Kashop, we've been looking at this market for a while, and there's been a lot going on. Basically, since the beginning of the year, the market has been at a very different shape than it's been for a couple of years. Energy started to move. We've saw the agribusiness sector start to move. Even fertilizer stocks starting to move. Currently, materials, industrials look a lot stronger than just about everything else. Energy pulled back a little bit, which is expected. You had 14 up weeks, guys. Of course, it pulled back at some point. It makes perfect sense. Looking at this market, do you think the energy trade's done for the moment? What do you think about the ceasefire? Do you think that's going to continue? It was real bullshit. I'm wondering your opinion on it as you're closer to boots on the ground than I am.
So ceasefire is absolute bullshit. I think lasted maybe a couple of hours, or maybe not even that. And so that was the day the ceasefire was announced, and everyone is like, okay, we are going to cool off a little. Let's sell some oil. Let's sell some copper. Let's buy gold for some strange reason. So when traders positioned this way, what happened? In a span of 10 minutes, Israel fired something like 160 missiles or bombs into Beirut and South Lebanon. And it was like the absolute worst humanitarian crisis that Lebanon has seen in a long time. I mean, it looked to me, and you and I, we are students of history. It just reminded me of the way NATO and US bombed Kosovo during the Yugoslav wars. It was kind of like that. It was brutal. It was uh, it was not even covered that much, and then Israel comes and gloats about it, and nobody cares. But that pretty much marked the end of the ceasefire agreement. Iran did not show up for the talks, and I don't think they will. And the GCC is kind of stuck now because, well, you might. So here's the thing: like Americans, Europeans, whoever doesn't really uh, read their history, whoever doesn't go back in time and read their history, like they would think that it's possible to just fight Iran and topple the regime, get away with it, and the country will fall in line. Well, the US tried that in 1953. It worked. It worked for something like 25 years, and then it didn't. And now, even if you do try regime change in Iran, even if you say, oh, I hate this government, I hate what they are doing, yes, that might all be true, that you might hate them, and what they are doing might not be the right course of action. But here's the thing, it's an ancient culture. They are more than 3,000 years old. They are not going anywhere. And if you look at where they are placed on the map, they are placed very, very strategically. So the Strait of Hormuz is pretty much the territorial waters of Oman and Iran. And the deep part of it, it all goes through Iran, which means any VLCC, any big crude carrying ship, if they want to go through the strait, well, they have to go through Iran's territorial waters. And in the 2022 Russia Ukraine war, Ukraine set the precedent where they mined the sea. So they mined the Black Sea so that it became impassable. And you and I, we traded that market. Wheat shot up because, well, um 20-30% of the world's wheat comes from Ukraine and Russia, and that supply was suddenly stopped. So what happened? Wheat shot up. So now I think Iran has taken cues from that, and they have mined the strait as well. So it is really impossible to know how this plays out. All we know is that it's going to lead to much higher energy prices in future. It's going to lead to much higher food prices in future. And the trade, if you're talking about the energy trade, I don't think it's done. I think we're just done with the first part of it. So now we probably get a bad trap where we get a little bit of a sideways or a consolidation along with news saying, hey, we solved the problem. Hey, look, Iran has come to the negotiating table. Hey, look, the ceasefire is holding. So I think we're going to get a lot of positive news, which will kind of try to talk oil down, talk energy stocks down, and try to send tech up again. And I don't think it's going to last. And I'm not talking about the geopolitics of it. I'm talking about the price action in the markets. I don't think the bullish price action in equities is going to last. I don't think the consolidation or the dip in energy is going to last for a while, and it's just going to go back to something like a 2022 setup, in fact, but much more on a bigger scale, where you're going to see energy absolutely explode. You're going to see stagflation the world over. You're going to see a lot of crises, like probably like the Arab Spring, because once you have soaring food prices, that's when you have more problems. And in India, so the news right now is that Iranian oil cargo has come to India. And the news today is that Reliance, which is the biggest oil petrochemical refinery here, they also own gas stations, and they have said that in you cannot put petrol, that is gasoline, for more than 1,000 rupees per person, which is 1,000 rupees is something like $10. So you're restricted to $10 of gas a day. So the shortages are coming, and LPG, that is your cooking gas, the shortages are already here, and it's probably going to get worse. It's probably going to get worse for whole of Asia. Now, when the world sees that happening, are they really going to be long tech just because Taiwan Semiconductor had a good Q1, or are they going to be long energy because that is pretty much the trade? Because without energy, the world doesn't run, and there is a real supply shortage which has zero chance of getting mitigated in the next 5 years. So we have to be prepared for $100 plus oil prices, just as $4,000 gold is the new norm. I think $100 plus oil is going to be the new norm, and we are going to see it reflected in the price of all these energy companies for, I don't know, a good to at least 2 to 5 years.
Yeah, I think that, a lot of people in the United States, they just have no idea how complex that situation is. They think of every country outside of the United States. I mean, that's the thing why people, like, if you want to do something, if you're a young guy, young girl, you want to get an understanding of the world, go travel. Go see it. Like these countries that you think might be very backwards, like just go. Certain places you can't go, but go see the Middle East, go to India, go to China, go to, South America, go everywhere, get some actual feel for what's going on in the world, because it's much different than people in the United States think. And, just getting an understanding of like the history, the culture behind Iran, what they control, how valuable it is, what they control, and the reason why the world's been trying to go into there for many years. I mean, Britain and Russia were warring over the area in the 1800s. And it's always been kind of a similar story, which is they always have two different people who are interested. And once they're all kind of holding each other at bay at all times, Britain was trying to go in and Russia was saying, no, you can't. And then like even today, it's like, I forget what exactly it was, but I think Israel said they were talking about like nukes and nuking Iran. And Russia was like, well, if you do that, we're nuking you. So I mean that's kind of, it's always been this very sought after territory. One, people want to be friends with them so they can also get the oil, get through the strait and so on at an easier way. But also there's the other aspect of it where people would love to take it over, and they have always fought away from being totally colonized. Even though there's been regime change, there's been all types of stuff, they have fought away from it over all these years. So it's going to be a very long process. I'm writing a piece today about the sixth rule of Fight Club, which is fights will go on as long as they have to. And it reminds me of this situation where it's like, this is going to go on as long as it has to. And I think too many people in the States are too stuck on the fact that this has to end. Like nothing, it's kind of like a trend. Like, you look at this trend in energy, it could stop here. That would be very surprising to me. That's the lowest probability bet. But once again, it could. Anything could happen. But it could also go up another 100, 200, 300, 400, 500%. Trends will go on as long as they have to as well. So this situation is very complex, and we'll keep updating you guys each week on it. Kashab has a really good feel for this. So we'll keep asking him questions. I'll keep giving you guys my insights. and I think we'll be able to navigate this very well. Currently, just looking at the price action, 14 up weeks, 2 down weeks. I'm not really worried about it just yet. I think this is just a pause in the process currently. Everybody's going, well, like, I mean, once again, you can't get every day right, not every week right, but you can get the long term trends right. And so many people saw like a down week and they're like, oh my God, technology is up. And it's like, they're dumping all their energy positions to get into technology and so on. If you trade like that, you're always going to be going back and forth all the time. You're going to be running around, driving yourself crazy, trying to get in and out of positions. But if you really figure out the way you trade and really figure out how to ride trends, that's the way you're going to make money in the long run. And so a couple down weeks doesn't really bother me. I just think the long-term trend is obviously up for all the reasons Kashop said. Also, the trend is just up, and I'm always going to follow that. So getting to crude oil, when we talk about crude oil, I keep kicking my camera. Or sorry, that's my dog. I'm like wondering why I'm shaking a little bit. My dog is under my table, which is kind of the general way this always works, guys. So if you guys are ever watching me and see shaking or something, it's usually my dog doing something. Anyways, so getting to crude oil. Crude oil looks very interesting here. And this is something that, a lot of people aren't really paying attention to. They're going, okay, well, let's see this turnaround here. Okay, well, we saw that big down day, so that must be the end of energy, right? Crude oil was down what? It ended the day down 13%, I think. At some point during that day, I think it was down like 20. Big move down, right? But if you were and I'm in the December contract for this, and so I keep looking at the December contract and going, okay, well, what is really going on here? So the December contract is basically sitting flat on that day, which was wild. Like it was down like 20 cents. Insane. When you have crude oil down so much in the other contracts, at least down $5 in the front month contract, that would be May. So getting to this so we can show it a little bit better. This is where it's currently at. So this isn't from the other day on the big down day. I would love to show everybody that, but I didn't get a screenshot from that day. So looking at the May contract, and this is when you see backwardation, where you basically start to see that people are getting paid to roll their contracts. This doesn't happen unless there is a major supply issue. Obviously, we know what that major supply issue is, so no big deal there. So as that major supply issue has come into play, we continue to see people can roll contracts forward and get paid to roll their contracts forward. This is actually a very positive sign for this market. So when you see this type of movement, and not to mention the December contract is moving up and holding up much better than the current May contract, most of the time that leads to a lot more upside in the market. So I think that this is going to probably continue to go higher. I think those supply issues are not coming undone. Just as Kashop said, looking at the fundamental side, I'm just looking at the futures curve. Looking at the futures curve, the fundamental side, what's actually going on. This looks like this is going to last a long time. So I would just stay ready for that one. And so Kashop, what are you thinking about oil, energy, and where do you think we're headed here?
So I wouldn't trade the crude contract, and the reason for that is it's like if you go back to the 1980s when floating currencies were new, you knew that central banks were always trying to push the market on one side or the other. So which means if you were trading forex like all the big guys were, then you kind of had to get a sense of what the central banks were doing. And it's the same thing in the oil market right now because Japan has openly talked about shorting oil futures. The US Treasury has talked about it as well, and there is absolutely no. Uh, no one knows what they are doing, and if they can push these contracts 20% during illiquid hours, then your stops are going to get hit and you're kind of not going to be able to participate in the uptrend. And if you're buying something like USO, then what happened during COVID when that ETF effectively blew up? So you don't know how those structured products are structured. So I would just avoid crude right now, even though I think it's going to go up. I think the future the forward months that you showed, the April 2027. So I think all those contracts, I think eventually they're going to go above 100, but the path that they take to getting there it is going to be a very, very volatile trade. So I think crude oil is going to be the new natural gas. So it's going to be very tough to trade. It's going to be very risky to trade. So for me, the way I would express this view is to go one step away from it. Look at the second order effects, the third order effects. Now, when you look at what's happening there, well, the sour crude that is supposed to get processed is not getting processed, which means you have a shortage of sulfuric acid. When you have a shortage of sulfuric acid and China says you're not going to export sulfuric acid anymore, then what do you do? What happens to the mine? What happens to copper? If copper production goes down and the supply shrinks, and then you have the same amount of demand, what does that do to the price? Same thing with uranium, same thing with pretty much other base metals. So I would look into the second order effects of this and not try to trade this particular contract because I think it's extremely risky and you're going to get really rocked around by the volatility.
Yeah, and Paris had an interesting question here. Guys, what do y'all think about aluminum? 20% of aluminum production ex China comes out of the strait. Even after the ceasefire, aluminum didn't fall much. Bullish signal, in my opinion. So, Kashop, if you're looking at aluminum in the lens of what's going on geopolitically, are you seeing any, value there? Not to mention, if we're looking at companies, I'm long CENX, Alcoa is another one that's looking good. The metals and mining sector is holding up really well compared to the rest of the metal sectors. So what are you looking at there? Do you think there's anything there for aluminum? And do you think that this trend could continue?
So I don't follow this market all that closely. What I would say is look at the rates that the Cape-size vessels are getting. So if you look at the dry bulk sector, look at the kind of TC rates that the vessels are getting, and that will tell you what's happening in that market. So if you see those rates going up, then it's probably there's a shortage and there is a supply constraint. So as long as those rates keep going up, I think you can comfortably be long aluminum, but that is not my area of expertise, so I'm not doing anything in that segment.
Yeah, for me, I look at it, just from a supply issue and something that are tells. And one tell that I saw earlier this year was that they started to pay for aluminum cans again in certain places in Europe, even places in the United States. This was, when I was a kid, there was a number always on the side of it, maybe 2 cents, 5 cents, whatever it was. And if you had an aluminum can, you could take it to like a scrap yard and basically get cash for it. That changed probably 20 years ago, I'd say. And now it's basically, nobody really gives a shit about it at all. As the years have gone on, though, and recently I've seen them starting to do that in certain places because they're having so many aluminum shortages around the world. So I think that aluminum's very similar to copper in the same sense, where it's like we need it for a lot of things. Same with copper, and you're probably going to continue to see both of these sectors moving higher. We will talk about copper a little bit more in a little bit as well. But now looking at fertilizer prices, this is a cool chart that came up the other day, and it was the UN food price index and North American fertilizer price index, and just kind of seeing these always go very hand in hand for obvious reasons. So looking at that whole industry, are you seeing anything in chemicals, anything in fertilizer stocks that you're like, hey, this is a great time to buy? Or do you think it's not really set up quite yet? What are you looking at here?
So I think a month ago was a great time to buy, and right now is just a good time to buy. And you have to be very picky in terms of picking your fertilizer stock. So if you are buying, say, ICL, which is Israel Chemicals, well, that's not going to do well because Israel is directly getting impacted by the war. So, what are those mines going to do? Are they going to be able to export their fertilizer to Europe? Probably not. So, you would not buy that stock. Now, if you look at Yara International, let's say it's based in Norway, and that stock has just gone absolutely bonkers. In fact, it looks like gold at during its parabolic run. And the reason for that is well, Norway has its own oil, it has its own energy, it's energy exported to the rest of Europe, so they don't have the same problem. So you have to be very picky in terms of which stocks you buy. Right now, I do not have a fertilizer trade on, although I have chemical trades on. But yes, I think it's a good entry point if you pick the right stocks.
Yeah, it's a tough sector to trade. I mean, it's just like trading coal stocks or trading small cap energy names. You're going to really need to follow people who really understand those industries very well. And not to mention, even you could understand those industries extremely well, and you could still run into situations where you pick the wrong stock. It will always happen. And there is no ETF. There's no great way to diversify in that sector. But at the same time, there's a lot of value there if you find, Kashop would always say this, and I completely agree with him on this. If you don't find just one, don't just go, hey, I've got one great energy stock or one great fertilizer stock. You want at least five, because you could have two or even three that go down, and stop you out pretty quickly. And let's say you're setting up your risk to reward right, and you're losing only 1 to 2% of your portfolio on those losers. And then your winners, you could have a huge 10x winner in that pair, and that could pay for all the losers and then some and basically make it a great trade. So make sure you have a little bit of diversification. Speaking about trading, we did get a question here. Hey, Jason and Kashop, I hope you're doing well. Is it a good way to build a trading strategy by observing a few sample setups in price action, turning them into rules, and then back testing them? So that's kind of my wheelhouse. So I'll answer that question. So if we're looking at you know, any type of price action, like the simpler, the better. I think when it gets like the dudes you see online, and this is mainly new traders, people who actually know what they're doing with technical analysis, will not have 10 indicators on their charts. It looks ridiculous. It's not going to help you. And most of the indicators start to overlap a bit. I mean, if you're looking at RSI, Williams percent, CCI, and so on, those are all the same indicators. Those are all momentum indicators. And then if you're looking at, OBV, which is on balance volume, force index, which is another volume thing, and let's say volume bars or volume by price, those are three different indicators that are for volume. So basically try to figure out like the few indicators you need. Really, like most of the time for any trading strategy, you might need two or one. Keep it as simple as possible. And yes, turn them into rules, but only turn them into rules after the back test. Don't just go, hey, this looks pretty good. Like if you're going to run a price action strategy and there's going to be no other inputs really, and you want it to be systematic, then you just want to back test it first, make sure it works. Don't expect it to work. Like people expect like 80-90% win rates and the most money they're ever going to see in their life. Be ready for that to not happen. That's never going to happen in any systematic trading. Any great trader, fundamental, technical, positioning, whatever type of way they trade, they will tell you that they're right less than 50% of the time, most of the time. It's very rare to look back. I mean, you could have months, like I've had months and even a year that was like, oh wow, I've had a really crazy high win rate. But I also know over time my win rate has been basically about the same, under about 50%. That doesn't matter at all. I think too many people get stuck on win rates and it doesn't make you any money. It's just like how we expect it, or how we talked about the fertilizer trade. You have 5 different names. We talked about one 10x winner in 5 names. That pays for everything. If you take let's say $1,000 for each of these, and let's say you lose everything on 4 of those trades, you lose $4,000, then you make $10,000 on the last trade. You still made $6,000. Like I did the math wrong there, but you guys know what I mean. Anyways, you still make money. So the overall goal is to not go into things thinking I have to be right all the time. Because if you go into trading thinking you have to be right all the time, you will lose a bunch of money and you will not risk manage properly. Think about it this way. Trader Vic would always talk about this, and we have a great interview on my channel. If you go to it, I think it's still the pinned one on my channel, so you guys can see that. So Trader Vic, Victor Sprandia, would talk about PhDs. And if you know PhDs, like, the most of the time, if you've ever met a few, which I've met many, most of the time they're very headstrong. They think they know everything, and they've been told that most of their life. They go to school, they're the best in their class. You're told you're very smart. You're told you know everything. You're told, wow, you're going to be right all the time. And they are right a lot of the time because they have this extensive knowledge base in their field, usually nothing outside of their field, but in their field, they have a good knowledge base. Then take that into finance and they start trading and they go, okay, well, I'm buying, let's say I buy 5 fertilizer stocks. I have my stop loss set to only lose 1% of my portfolio on each of these. Let's say all 5 are wrong. I'm going to be out of the trade That's it. I'll just take my loss and be like, I got it wrong. Most of the time, somebody who's very headstrong thinks they're very smart. They're going to be like, well, I'm right. So they'll just keep buying it, buying it. They'll say the market's wrong. Why is the market not doing what it should be doing? They'll start to grasp on all those things. And before you know it, they've had blown up an account. So this is a very important distinction, is that there's a difference between being right and making money. And you always want to understand, like, it's not about win rates. It's about maximizing your returns on your winners and keeping your losers small. Big winners are good. Small winners are good. Flat trades are fine. Small losers are fine. Then and actually, if small losers are good, that shows you have discipline. Big losers are the only trade you really want to avoid. That's going to wipe out your portfolio. So cap those big losers and you'll make money, and don't try to be right all the time. And so let's hop to the next couple things. So we want to talk about silver a little bit today. I brought this chart basically because we haven't talked about silver at all in a while. Hasn't been much to say about it. Hey, it went up, it went down. We had the trade. I talked about it a lot when we were in the trade. When we got stopped out of the trade, I updated everybody about the stop out. That was it. So basically it's gone sideways, hasn't done much. But I wanted to point to the fact that we have this big breakout still. My biggest thought on the commodity cycle since 2020 has been some of these ranges that we're breaking out of, we're never going to come back into again. Kashop mentioned, oil over $100 could become the normal. I think he's right about that. I think that could be a situation that we continue to see going forward. That's developing, so it isn't quite there just yet. But as that develops, I think in a couple of years we'll look back and say, yeah, it's probably going to stay sustainable up over 100 at some point. Silver is another one where you have $50 silver. $50 silver sounded insane earlier, even last year. And then we got up to 50. We broke through it. I don't know if we see silver under $50 again. That's pretty crazy to say currently, but at the same time, I think that's possible. I think, if you look at the commodity cycle, you go all the way back, over time, you'll see that these ranges happen and then we break out of these major ranges, and it doesn't tend to go back most of the time. And honestly, with inflation, it shouldn't. It doesn't really make much sense why a lot of these do come back. Gold broke out of major ranges. We're seeing other commodities break out of major ranges. I think silver's the next one that's just going to be above $50 for a long time. So Kashop, any thoughts about the precious metal sector, silver, gold, platinum, palladium? If you think anything's worth buying, or do you think it's worth still holding, or do you think it's time to walk away?
So I would say platinum and palladium, I really don't know how it's going to play out, because here's the thing, we are in an environment where there is supply destruction and demand destruction. So how does it play out? It depends on the rate of change of the supply destruction and the rate of change of the demand destruction. Whichever is greater, you're going to have a move that way. Now, I really cannot predict how that will play out for platinum and palladium. What I can tell you is, if you look at silver, most of the silver that gets mined, that comes out of base metal mines. It comes out of your zinc mines, your lead mines, so all the other mines. So for silver production, when you see, and most of these base metal mines are big, massive open pit mines, which require a lot of diesel, a lot of power. And the world is running out of diesel and power because of the war. So what do you think happens to these mines, especially the mines in Africa and the mines in, say, Southeast Asia, which are the most affected by the crisis? They are going to get shut down. When they get shut down, what do you think happens to the prices of the base metals and silver? It goes up. So with gold, uh, I really do not know, because gold doesn't trade on supply and demand. It trades on the existing stock and the demand for the existing stock. So if you go to Austrian economics, there are two types. They draw two types of demand supply curves. One is your exchange demand and exchange supply, and the other is your reservation demand and the total stock. So as in your total demand and the total stock. So if you look at gold, it trades on the total demand and total stock. So for gold, I don't know how it's going to play out. One bearish catalyst is you've seen Turkey selling quite a lot of their gold reserves because, well, they kind of need to raise the cash right now. And if you look at pretty much investors in the GCC countries, investors who are directly affected by the war, they also need to sell their gold in order to finance some of their expenses or to diversify or for a lot of liquidity reasons. So, if we look at the situation, there is definitely uh, supply hitting the market, which would not hit the market under normal circumstances. At the same time, there is a lot of fear, and everyone who can see the end of empire, the end of US hegemony, sees that gold is going to move higher the way it did in the 70s. So they are buying. The entire global south is buying. Even US investors are buying. ETF investors, not so much. But even in the crypto space, if you look at the way Pax Gold and Tether Gold have taken off, it is quite evident that there's a huge demand for gold in that market. So once again, you have a temporary increased supply coming from the Middle East and Turkey and those regions, and you have permanent demand setting up from all these other players. So we are going to kind of see the tug of war, which will get eventually resolved with gold going much higher. When that eventually would be, I do not know. But my prediction, I expect gold to end this year higher than it started. I don't know what path it takes to get there, but I think in dollar terms, gold is going to end up for 2026.
Hmm. I mean, I really do think that's a possibility. I mean, gold actually is holding up really well currently. I'm very surprised to see how well gold is holding up while everybody's kind of going, well, gold's dead. I think that's a scenario where it's could go a lot higher and it would surprise a lot of people. So once again, it's a let's continue to watch and see. I want to see this thing base out, continue to flag pattern, start to move higher. But so far, so good. I mean, gold doesn't look bad. Silver really needs to play catch up. For me to get really bullish on that sector, I'd like to see the gold miners and silver leading once again, which they're not really far from that right now, anyways. So if we start to see that really moving, that would be very interesting. And then copper. Copper has been a lot stronger than basically all of the metals currently. And the biggest thought I've had for a while is that the base metals will probably continue with energy. That's very normal as there's supply issues, as there's more demand globally, and so on. You continue to see these things continue to move higher, probably together. So as we kind of can see that, as we see that continue to happen, I think a good place to continue to look for people is in the metals and mining sector. I think globally, the metals and mining sector looks great. South America is probably the place I would hunt more than just about anything else currently. But definitely metals and mining, whether it's steel, aluminum, copper miners, and so on. I think it looks really good. And also, this is still pointing to higher yields. I didn't bring a bond chart today, which is surprising for me, but the dollar looks like it's moving down. Bonds do not look good. They look very unhealthy. And everybody keeps pointing to this or that consolidation, whatever. I straight up bought put options on, the bond market pretty recently. The volatility is very low. The discount to premium is really good, meaning you're going to get paid a lot if this starts to break down. So TLT, basically, I'm thinking that goes down a lot more pretty soon. I think copper's telling you that. I think oil's telling you that. And these are the most highly correlated things with yields in history. There's no way I see oil all the way up here. And, once the CPI reports start coming out and they get heavier and heavier and heavier, there's no way I can see that yields will not go higher and bond prices will not go lower. So I definitely like the look of copper currently. And then the international ETFs, these are showing us so much currently. And a lot of these are commodity based countries. Norway, obviously, that's very linked to energy prices. Brazil is also pretty linked to energy prices. So these are the ones that are up almost 30% year to date. So if we just continue to look through all of these things, I'm just really seeing a big setup here for international to continue to go higher now, especially that we have the dollar rolling over as well. I think that's where you want to be. Everybody's going to talk about technology or this or that, and because it's been the trade, and everybody always goes back to the last trade. Everybody's always fighting the last war. It's ridiculous. Like, that is not what you want to do as a trader. You want to continue to shift and be able to move around to just what's next and not give a shit what the last thing that happened. If it is technology, I'd be on here banging, pounding the table about buying technology. It just isn't that currently. That isn't the environment. That's not where the outperformance is. The outperformance is in international, it's in metals and mining, it's obviously in energy and so on year to date. So as we continue to see that, we want to continue to position ourselves like that. So are you seeing any of these countries out here that are worth buying currently, Kashop? I see like, Norway was an interesting one. I highlighted it a few months ago, and then we kind of get into Brazil. We're still seeing Argentina's finally starting to move up again. Brazilian small caps. Spain looks decent. So, or what are you thinking about the international trade? Is there anywhere where you want to be currently? Anything you're looking at and digging into? I know you find a lot of stocks all over the world. So, is there any area you're looking into and digging into currently?
So I've been spending the last couple of weeks looking hard at Nigeria. And the problem is I cannot invest in it. So if you do have access, then I think that's a market you should all look at. And the reason is they produce crude oil, now they refine it and they export the refined products. Now, which other country apart from say US has that combo? Almost none. I mean, apart from when I say US, I mean all the developed countries. Which other country has the combo? None. So I think, and if you look at their currency, the currency has started appreciating. So I think that's a very interesting market to look at, and it's one that's very overlooked because who cares about Africa? Well, this is the time to care about Africa because they have the minerals, they have the resources the world needs, and this is the time in the cycle where African currencies can really run hard against the dollar. Anyone who has looked at the South African rand in the 70s when they were the biggest gold producer, you can see that in the charts. You can see that the companies paid massive amounts of dividends. In fact, the dividends were so fat that you would have made your cost basis many times over by the time that cycle ended. So this is the time to start looking seriously at Africa. I like Brazil, I like Norway, but I think almost everyone's long Norway right now. So I don't see a big alpha in saying I like Norway, but I like Brazil. I still like South America. I like Colombia. I like all these other places, but I think people should seriously start looking at Africa and figuring out if you can find ways to get exposure to Africa.
Yeah, Africa has been a very great investment currently. I mean, for the last year, a lot of people overlook that. We talked about it. We're long some areas, and once again, some stocks as well. It's going to continue to probably be an area where you want to be in. A lot of people don't know the history there. A lot of people don't know the resources there. A lot of people have no idea about it, or even that it has, countries that are developed, especially in the United States, like we were talking about earlier. People just have, they think about that. They think the United States is like the center of the world. We're the only one that looks like this, and then everybody else is, basically cavemen. It's not true. Like, I don't think everybody thinks about it to that degree, but it kind of seems like that. It's like, they think of the Middle East as a desert. They think of Africa as, lions, tigers, and bears. No bears, but and so on. And then they think of South America, rainforest, different ways. So they just don't think about it in the way that it really is, which is there's people living in all these places. They are very, they have lots of different companies. There's lots of different value out there. And the same way we talk about, Europe. Oh, this is the Google of Europe. This is the Facebook of Europe. But if you're an actual stock investor and you really dig into it, there's also the Facebook of Africa. There's the Google of Africa. So you got to remember that there's a lot of places to invest. But currently, I think what you really want to continue to look at more than anything else is international. I think that's going to be the best way to continue to gain exposure. I'm not sure. Norway just kind of started getting moved. It couldn't go a lot further. All of these could continue to go a lot further. The actual answer here, though, is like figure out, like look at the international trade, as Kashop was talking about. Figure out where you want to be positioned. Doesn't have to be in just this list, but this list just tells you that international is outperforming over the last month. This is what we're looking at here over the last month. How much of it has it outperformed the S&P 500? And nearly every single country. I only saw like there was probably 6 has outperformed the S&P 500 this year. And then also in the last month, there isn't many who haven't outperformed the S&P 500. So continue to look in those areas. As you guys are seeing spikes in the S&P 500, you guys definitely want to start looking at the spikes that are happening overseas in all of these markets. So here's the emerging markets. When we look at this, we're kind of just seeing this massive uh, base pattern. So you have this massive base that's been going on for a while. We broke out of it. We came back a little bit. This is a monthly chart, so monthly candlestick. So there's a big wick, came back a little bit, ended up buying again. Not myself, but buyers stepped in. I've been long and just holding it, but buyers stepped in, bought this again around this point. Now we're going higher once again. So I think like the international trade, I think emerging markets, you don't have to buy the EEM ETF. You can really dig in and figure out where you want to be, positioned, if you want stocks, if you want ETFs, whatever. But this is where you want to be trading currently. And we're back above these levels. If you guys even like long-term traders who want exposure today, you could buy it today. But these basing patterns, this is the point where people hate buying things like this because it's gone up a lot and people go, this is over. But if we're breaking out of a major base, this usually doesn't stop anytime soon. So, this I could see this hitting 100, in the next few months to the end of the year pretty easily. And so the S&P 500, and so basically we had OPEX and a full moon. So I think OPEX would have been the end of the third week of the month in March. And then the full moon was April 1st. And so basically, it broke down past 650, and right around that point, I talked about OPEX and Mercury retrograde coming to an end as well. And so that could start the bottoming process. We did start to bottom out that week actually, and then we started to move higher. So the big thing here is, yes, the S&P is moving higher, which I like to see because that also means a lot of these international things will move higher and so on. But it doesn't mean that's exactly where I want to be. So Kashop, looking at, you've been talking about big tech. You talk about the S&P 500 probably struggling for a while. What are you seeing here? Do you think that this can move higher now, or do you think it's just like, hey, we've got some excitement around the Mag 7 for a little bit. We'll see it pop up a little bit, and it'll probably roll back over again.
So I think the sharpest rallies come during bear markets, and if you look at what's happening, it's not so apparent in the S&P, but it's apparent in the Nasdaq. I think what you're really seeing is some kind of vicious short covering, and after this, it's going to be a long way down. Now, the fundamentals support that. The fundamentals have been supportive of bear market in the S&P for a long time now because let's face it, like Nifty 50 was ridiculous, and the Max 7 is even more ridiculous. So it has to end at some point, and now we have all the catalysts for it to end, meaning a weaker
Explain
dollar.
the Nifty
Yeah.
50 to people because not everybody's going to know that.
So there was this time where people thought the PE doesn't matter because if you're buying these great growth companies and they're going to keep growing forever, then no price is too high a price to pay. And that worked for a while. These were companies like IBM, Kodak, GE. The trade worked for, I think, a decade or something. And after that, it sucked for an entire decade. So there was a period, I think, 1960s, where the S&P had a decade of zero returns. And we are absolutely going to get back to that point soon. So it's just what you're seeing now is a kind of a last chance for investors to get off the boat, and then the boat just sinks, and the boat is going to carry a lot of passive capital with it, and we're already seeing the signs. So if you look at, so the equity market is always the last to get the memo on when something goes wrong. If you look at what's happening in the credit market, you can already see the cracks. So Carlyle, they had to halt redemptions. I mean, they're not able to sell enough to handle the redemption request. Blue Owl, it's been a complete disaster. So you see all this money that has gone into data center financing, and now investors want out. They're not able to get their money back, and the contagion is spreading. So you started to see this with Oracle. Oracle, when they announced their big deal, they had a $900 billion market cap. Now it is half of that, and they have laid off 30,000 employees. So you're kind of starting to see the entire semiconductor cycle. And here's the thing, like if you go back to 2008, 2013, you will really see that semiconductors are cyclical. And right now, all we have seen since the launch of ChatGPT is the up part of the cycle. When the down part of the cycle hits and you see that the S&P is concentrated heavily in all these cyclical stocks, you're going to see a vicious bear market. So I think this is probably a last hurrah, and this is probably the only time that passive investors can get out at these prices before they face something like 5 years of zero returns. Now, I'm hesitant to say it's going to be a long bear market because anytime the market falls, the Fed will print money. And when you debase the denominator, the numerator goes up. So it's easier to just say the S&P is in a bear market with respect to gold than to say it's in a bear market with respect to the dollar. So I think what will happen is we are going to see the S&P fall hard in gold terms maybe for the next 10 years. And it's just going to be the way it is because the way the index is constructed, they want to really focus on whatever has worked. It's a relative strength model. And when that stops working, well, these companies have to erase trillions in market cap before the index can sort of reorganize and become more equally weighted.
I'll also answer that too. That's not technically relative strength. It's market cap. So they are always, you're going to have the biggest ones inside of there as the largest companies. Relative strength isn't really going to come into play unless it's relative strength in the largest companies. So I don't doubt that scenario where we continue to see all of the largest companies putting so much weight on the index is probably going to continue. That's the reason why it's like, if you are in the market, if you want to be in the US market, like look for some of these sectors that are much smaller. Look for some of these sectors like materials, industrials, even and obviously energy currently, gold miners. And so Kashab, you said this in what you were saying, and so I wanted to bring this comment up. I heard gold follows the S&P. I wondered if it gets dragged. I wonder if it gets dragged down with it. Now, if you've looked over the last 3 years, basically, you've seen gold outperforming the S&P by quite a bit. I mean, it's actually an insane bit currently. And so this can go on for a long period of time. Like even think about 2000 all the way till 2011. Gold was outperforming the market handily all those years. And so I think that's more the scenario that we're talking about here. It's not that, you want to invest in the S&P 500. I don't suggest it. And you could be at a point where it looks, I mean, inflation will cover up a lot of bullshit. And I say this all the time. And the reason why I say this is if you go back to the 70s and you look at the stock market, everybody's like, oh, that sucked, but they didn't lose too much money or whatever. Yes, you lost a ton of money if you did that in gold terms or opportunity cost terms, or if you look at it in inflationary numbers, like you lost a fuck ton of money. But the inflation and all the money that's coming into the money supply and so on, and creating more inflation will basically make it so the market looks decent, flat. Currently, we have a lot more money, but we have a lot bigger stocks in the stock market. So there's still going to be money flowing in. It could look like it's in some sort of an uptrend, but once again, if you weight that against gold, you weight that against oil, it looks insane. You weight that against gold, it's been outperforming for a long time, definitely up a lot higher than the S&P 500. And can the gold go up as the S&P 500 goes down? Yes, it's happened many times in history. And there's times, and the relative strength also shows you that the periods of time where the S&P 500 is going down, gold is either going up or holding up a lot better than the S&P 500. So it's more that, I don't know exactly what the future holds. I'm not exactly, Kashap's a little bit more bearish on the S&P 500 than I am currently. I still think it is in an uptrend. I still think there will be some sort of participation. We'll probably hit new highs at some point. But I also agree with him completely on the fact that if we're looking at it as in I want to be in the S&P 500 or I want to be in big tech because I'm going to make money there, I think that's a ridiculous way of looking at it. I think there's much better sectors. There's a lot more money to be made in looking at other countries, looking at other sectors inside of the U.S. You're going to make a lot more money in these areas than continuing to try to be in the shit that worked before, because that's not how markets work. As much as we all would love to have very predictive, easy to understand markets, it's just not the way it is. It will change and shift over time. You'll have a decade of technology working, you'll have a decade of commodity sectors working or international working and so on. You have a decade of weaker dollar, you have a decade of stronger dollar. You have to learn how to trade all of these environments. It doesn't matter what you're trading, you just have to learn how to trade it all. And that's the way you're going to make the most money. So just one thing to end on about the S&P 500. We are in April. April is a very bullish month for the S&P 500. So as we're in April, which has a 74% win rate over the last 33 years, meaning it's been up in the month of April 74% of the time. That's very high. You're probably going to see a bit of a boost here. You could see a little market move a little bit higher. Sell May and go away. It's kind of a myth. At the same time, like June is usually a pretty rough month. So I wouldn't be surprised if we see the rally kind of continue for the next couple months before a big rollover. Seasonality is not a trading tool. It's just a way to look at the market and get an understanding for, hey, I wouldn't be surprised to see a rally here in April. Makes perfect sense. But then getting into, once we get into May and so on, that's where we could start to see some pressure over and over again. And remember, it's a midterm election year. Midterm election years are always a mess. The market is always very volatile. You're going to have a lot of trouble. So once again, understand the volatility, understand where the environment you're trading in. So Kashop, anything you want to end on for everybody today? I think this was a great show. I think we covered a bunch of stuff. If you guys have any
Yeah, I
comments
think
or questions, please drop them immediately.
so. Last week on the Holy Macro Show, I said buy Bitcoin, which is a very uh, surprising call coming from me because every time we have spoken about Bitcoin, I said I'm out. I don't think I'm getting back. And recent events have started to prove that the reasons for me to get into Bitcoin were the right reasons. So, in the report, I talked about how Iran is going to start demanding the payment of tolls and Bitcoins, and that's come true. And the price has gone up from around 66K when I talked about it to 73 now. And I think we're in the early stages of a bull run. So, I think it's still a good time to buy Bitcoin, and that's the free idea that I leave you with today.
Nice. Yeah, I think it's interesting because for me, I'm looking at that level, 75, 850. We start to get over that level. There's not really much holding it back after that point, just price action wise. Fundamentally, like the case Kashop brings up is a great one. And I think that, this could be something that is a sustainable up move. And it's also interesting to hear. And this is the thing about good traders, and you'll see this all the time, which is any good trader. I will, like, before I started buying international stocks, I remember being on a show talking about China. It might have been this show talking about China and being like, I would never buy China. Like I'm not buying China. It is I mean, at that point, it was a couple years ago, it was in a nasty downtrend. It started breaking down one after another after another. It just looked terrible. And somebody was asking about China. I was like, I'm not touching that thing. It's ridiculous. It was probably 2-3 weeks later, started hitting 100-day highs and 52-week highs. And next thing you know, I'm long China. So that's how good trading works. Is you could have a very like harsh mindset on something. Like Kashop was against Bitcoin for a while, saying he didn't want to buy it. He was in it for a very long time, made a very great trade in it, got out of it at a good time, and was waiting for a new opportunity. And then got on, and everybody's calling him a perma bear and so on. And then he gets on and has a different mindset on it when the evidence changes. That's how you trade well. A lot of people want people like me and Kashop to get on and be like always bullish on something or always bearish on something. That's just to make people feel good. That makes you feel very good that like, hey, like Kashop and I know we've worked with people that run letters that are just gold, buy silver, buy Bitcoin, run for the hills, short stocks. We've been around that crowd. And we see that those newsletters sell. They sell better than mine. They sell better than Kashop's because people feel good about it. However, those newsletters don't make anybody any fucking money. And that's the truth. And so if you want to make money, you got to be quick to change your positions, change your ideas as the evidence changes and it fits your trading style. All right, guys, I got to run. Kashop, thanks for coming on as always. We'll be with you guys next week on Friday for the Holy Macro Show at 10 a.m. We'll see you guys soon.
Thanks, Jason. Bye, everyone.